Trade was taken on January 22nd, 2018. It was taken again mostly of the 5 minute 5 minute chart. So, yeah, market has been moving pretty choppily as we can. Oh, that is not the right one. Yeah, good enough. Pretty much shows what I'm trying to show. So, market's been moving pretty much sideways for a long time on the Aussie dollar. I'm sorry, the euro dollar. Since pretty much like the middle of January, and today's the 20. Well, this trade was taken on the 22nd. So, on the 5 minute chart, because that's mostly what I traded off. Okay, so the market had kind of been moving in this manner, right? So this zone right here is a solid zone of reversal. So I anticipated that, and after this candlestick and this candlestick, this black candlestick occurred, I said, well, that's good enough for me. Set my stop just out here and my take profit all the way down here. Now that might seem a little radical, but from a longer term uh, charting perspective, it's actually pretty reasonable, I would say. Yeah, so took the trade. They're anticipating a very strong reversal. Potentially, I would have looked at the trade later, and depending on what price does in this region, I may have closed it out. But price ended up actually took me out about 2:16. What is this? Yeah, about 2 hours later, a little bit less. This did set up to be a very, very like insane risk reward ratio. Basically, like more than 1 in 5. I guess I should take the trade kind of closer. Yeah. So it was like more than 1 in 5. At the time, I didn't realize it, but it was like an insane risk reward. But anyway, it doesn't matter. I got stopped out, and it's good that I did. Price is pretty much pushed back up very strongly. So the market kind of rejected that idea. All right. And then I took a trade on the Aussie dollar, which did better. So let's see. Price had previously been moving in this trend. In fact, let's look at the hourly so we can really get a feel for what's going on. All right. Price had been moving in large kind of harmonic. It's probably not the right word for it, but I'll call it wave pattern or just wave motion, like boom, 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 like up, down, up, down. Okay, so right, down, up, down, up, down. In fact, I'm probably about to take this trade for up to about these levels. Set me up for a good risk reward. So in the 5 minute time frame, I just saw the market really was pushing upwards here, right? So what really kind of sealed it for me was after this potential push down didn't occur, and the market started pushing back up. I said, okay, I got in, set my stop just outside of here, and I set my take profit. I anticipate the market come to at least back to these levels. So it did, pushed up pretty straightforward. Oh, so there's something special about this trade. I took this trade like almost 2 p.m. And when I looked at this trade again, it was around 4:45 or 4:40, and basically the market would have closed in the meantime. So from 5 to 7, the futures market would have closed, at least for the Aussie dollar or the currencies. So at around 4:50, I manually exited just because I was 1 tick away from profit or 2 ticks away from profit, and I really didn't want to see the market open up 2 hours later and be stopped out. That would have really ticked me off. Yeah, so I manually exited for an 8 tick gain. Ironically, 2 minutes after I manually exited, price immediately popped up to where my take profit was, so for the whole 10 to gain if I had stayed in, but that's fine. It doesn't really change anything. And looking at it now, if I had stayed in the trade, I would have been fine, but I still think I did the right thing there. Uh, yeah, so this was really more of a prices trending upwards. This is the first take profit, and I don't really want to extend it just because I'm not sure what's going to happen. Yeah, decent risk reward, done.